This is the example walkthrough for free cash flow. We're going to be calculating free cash flow for X company in the year 2024. And free cash flow is a really important measure because it shows the way a company is utilizing cash through its operations, and it also illustrates the way a company can reinvest back into itself after it's accounted for all of its operations. And so it takes into account things like NOPLAT, the change in net working capital, and net capital spending that have a lot of focus on the changes in their current assets, current liabilities, and fixed assets. And this is important because these types of things are what drive a company's growth. And so understanding the way that the company is changing year to year and the way that they're utilizing these things to grow is really important. So we can start by noting that the calculation for cash flow is our NOPLAT plus depreciation minus change in net working capital minus net capital spending. And NOPLAT is EBIT times 1 minus the tax rate, and the change in net working capital is our current assets 1 minus current liabilities 1, so that would be the change in that would be the net working capital for 1 year, minus the net working capital from the previous year, so current assets minus current liabilities of that year. And our net capital spending is fixed assets from 1 year minus fixed assets from the year before, plus depreciation. And we add depreciation back in because it's not always accounted for in the fixed assets, and depreciation is almost always associated with fixed assets like property or equipment. And so that's kind of why we account for it in our net capital spending. So now if we can start off by calculating our free cash flow, it's always best to kind of break free cash flow into its separate components and calculate from there. And so if we were going to start by calculating our NOPLAT for 2024, we can take our EBIT, or operating income, and multiply that by 1 minus our tax rate. And if you don't have an explicit given tax rate, it's always safer to assume that the tax rate is 26%. And this changes in the economy from time to time, but as of now, it's safe to say that 26% is the tax rate. So we can do 1 minus 0.26. So we can see that our NOPLAT comes out to about 26,000. And now we can calculate our change in net working capital. So we take our net working capital from 1 year, which is our current assets minus current liabilities. So this will be from year 2024. So we take our current assets minus current liabilities, and we subtract the net working capital from the prior year. So our current assets minus current liabilities from the year before. We can see that it's about 12,000 here. And then we can move on to our net capital spending, which is our fixed assets 1, so fixed assets from 2024. And in this case, we don't see any other fixed assets besides their property, plant, and equipment. So we take our fixed assets 1 minus our fixed assets from the year before, and we add back in depreciation. So for 295. And then we know that depreciation from this situation is 325. So we can just put that there. It makes it a little easier to calculate once we've listed everything. And we can label this as depreciation. So now that we have everything we need, we can just plug these into the equation and solve for our free cash flow. So we can take our NOPLAT plus depreciation minus our change in net working capital and minus our net capital spending. So we can see the X company has a free cash flow of almost $14,000. And this is just something to take into account. If you were to be analyzing this company, you can see that this is the amount of money that they have available to reinvest, to pay dividends, to pay interest after they've accounted for all of their operations and costs of doing that. And so it's a really important measure, really important to look at and understand, and also understand what goes into it. And this wraps up our free cash flow calculation.
My name is Rick Haskell, and I'd like to thank you for watching this video as part of the Bill and Viv Gore School of Business's Business Certificate Series. I'm a finance professor in the business school, where I'm also the director for the college's Center for Financial Wellness. The Business Certificate Series is offered through the Center as part of our outreach through the Gore School of Business. You can follow us on social media through Westminster's Instagram, YouTube, LinkedIn, or Facebook pages. You can use the QR codes provided or simply go to these websites. Thank you.